Hello everybody, it's North Star here again, and this time I'm going to take a look at the chart for silver and just how I'm seeing things developing over the coming sort of weeks, months and years even. So what we've got on the screen here is a chart of silver that goes all the way back to the 1970s, and it shows very nicely how that huge cup or arc formation sort of built out over course of 2 or 3 decades really, into the early 2000s, and then when price peaked in 2011 and pulled back, we formed a handle. There's two parallel sort of trend lines here which we've broken out of, and price has also broken through other sort of resistance lines, and with a sort of looks like a developing smaller arc formation. You can see multiple touches on the left hand hemisphere of the arc here, and another one here with a weekly close and monthly close, sorry, I beg your pardon, a monthly close back inside the arc. So now that we've cleared these resistance levels, we've sort of broken up through well, I suppose one of the final horizontal resistance levels until we reach sort of $35 certainly, and then the next one is the all-time high. So we're back testing this sort of $23, $24 area at the moment, and if we fall a little bit further and drop back down to the next horizontal support level, that's going to be somewhere around about $20, $21, I would have thought, which I think is quite possible at this stage. I would have put the odds of that happening probably at least 50-50, probably maybe 60-40, but developing news out of the States with the election campaign and Donald Trump's coronavirus infection and everything else could easily negate any further falls and see silver price breaking out and upwards. So that's going to need careful watching. If I just sort of briefly put this onto the 3-month view, the indicators, the technical indicators on the bottom of the chart there, will give us a much better long-term sort of view of what's happening. It takes out a lot of the noise in terms of the daily and weekly movements and even the monthly movements, and we're left with the quarterly trends. So you can see that, particularly with the MACD indicator here, we're only just starting to move close to and back above zero. You can see what happens when that phase, or when that process of moving above zero occurs. It's this, a sign of a developing bull market, which saw the silver price last time move from $4 to sort of $50. It also happened way back here before the start of the chart. You can see that the MACD indicator is above zero here, and it would have moved up from below zero to above zero sometime, I guess, in the early 1970s. And as the MACD indicator sort of accelerated upwards, you can see what happened to the price of silver. I mean, effectively, it moved from a little above $1 to the best part of $50. So 50 fold moves in the price of silver during a bull market are perfectly possible. This move from $4 to $50 is a sort of a 12-fold increase. So if we sort of have a conservative view and say maybe a 6 or 7 or 8-fold increase from the starting point here at around $15, then that's going to take us way past $50 and up to sort of $70, $80, and more realistically with a 10-fold increase, that would take us to well over $100. So those are the expectations that I have for this sort of silver market going through between now and the late 2020s, when I expect to see it peaking. Looking in more detail at what's happening at the moment in the price of silver, I'll pull up another chart for you, and this chart shows a more recent time frame from sort of around the late 1990s through until now. And we can see that this developing arc, if I move on to the monthly chart rather than the 3-monthly chart again, let's get the monthly candles on here. Here we go. So this is the arc formation that I've been following, and you can see multiple touches of the arc on its left-hand hemisphere. I could reposition it slightly better, pull the arc out a little bit, so you can see that once you're in the arc, the price bounces up, and then it bounces off the arc again, bounces off it again, bounces off it again. People sometimes ask me why these arcs exist, and the only sort of explanation I can come up with is that the momentum, the selling pressure, as you decrease and go down further and further in price, the selling momentum decreases proportionately. The selling pressure seems to slightly easing off an accelerator on a car. You know, the car will just naturally sort of glide to a stop on a flat surface. And the same thing's happening with silver price. You know, you're seeing the silver price volatility. You know, you get a little bit of an uptick and then there's a rapid drop, but the overall trend that's controlling all of this is easing, and it's almost like there's a predetermined bottom to this, you know, in terms of the price, and regardless of what happens in the daily, weekly, and monthly sort of movements, there's a sort of a controlling floor or a limiting floor to the price. Whether this is some kind of coincidence, whether it's mathematics and numbers that are controlling this, or whether it's the algorithms that, you know, that control a lot of the trading that goes on, I'm not entirely sure. All I know is that these arcs are very common in trading patterns right the way across markets, not just gold and silver, but other commodities and other equity markets as well. So they exist, and knowing that they exist helps us to set expectations for the future. So moving to more recent price action, you can see that the March anomaly pushed the arc to its absolute limits here. Sort of readjust the arc a little bit there, and you can fiddle around with where you draw the edge of this arc, but it did really push it to its limits. But ultimately the arc, or the sort of influence of the arc, came into play, and price has catapulted upwards very rapidly away from that sort of support zone. In doing that, it's punched right the way through the various resistance levels. This line here from the top, back in 2011, there are several places where you can put this line, so we'll go through them. There's one here which we would have been watching earlier on in the downtrend for silver, and price broke out of that. Everyone got bullish, but then it went sideways for quite a period of time. You can draw this line following the developing price action. Can draw it in here as well, and you can see how price sort of bounces off the line to the downside and to the upside. And again, we broke through that in 2017, back tested it in 2018. Then we can move the trend line out to here. There's a very nice sort of test of the trend line from below. And then we break out above the trend line and then come back down and test it. And when we test it, we also test the arc as well. So we're testing two support levels there. Moving on to more recent price action, there's another line placement in here, which we've more recently broken out of. And each time we sort of move up, it becomes perhaps less necessary that price has to come back down and test the breakout, because you're moving further into the developing bull market for silver. So at some point, it probably isn't going to keep coming back and testing these low levels, sort of below $20, as selling starts to overwhelm. Sorry, I beg your pardon, as buying starts to overwhelm selling. So we probably could put the line just in here at the moment, and on a monthly basis, we've sort of been back testing that line. It's a little bit debatable whether you could justify putting the line in here because the candles don't fit too well. I've got some annotations in here which are kind of obscuring the recent price action. So what I'll do, I'll focus in on that by going onto the chart for the last 12 months. And this is that sort of annotation in more detail. So what I've drawn on here is my interpretation of what might be going on. So we've got the, in fact I can probably take this line out now, that support resistance line. So it leaves us with the arc, curved arc formation at the bottom, which is this bottom black line, rising black line, which we broke below during the March sell-off. Since then, prices accelerated to the upside and reached a peak around $30 back in August. So if we use Fibonacci, there's a tool on here where you can use Fibonacci retracement levels. And if you're not familiar with Fibonacci, Google it and have a quick read about it. But I think most of us probably remember at some point hearing about it during math lessons back in our school days. But Fibonacci is a series of numbers that repeat all over the place in nature, and not just in nature but in the markets as well. So if you set the Fibonacci starting level up here at the peak, and set the if I sort of compress the scale a little bit so we can see what we're doing, you can set the full retracement level, the sort of 100% retracement level, all the way back down to the March lows. So no retracement is here, and then you come down and you have a 23.6% retracement here and a 38.2% retracement on this line here. 50% retracement takes you down to $20.67. So what we're saying is that each of these levels represents a percentage retracement level, and that percentage relates to a Fibonacci number. 0.618 is probably one of the better known Fibonacci numbers, 61.8%. So if we saw a 61.8% retracement of that entire move, that would take us to $18.50, or at least the way I've placed these Fibonacci lines. And if we see a 100% retracement, then what we're saying is that we retrace all the way back to where we started. So that's obviously back down to somewhere just above $11.50. So anyway, what does all that mean? What it means is that well, a while ago I sort of identified and theorized that we'd be seeing a bullish consolidation. So if we're seeing a bullish consolidation in an ongoing bull market, what you should have is some kind of bullish trading pattern, and that bullish trading pattern very often takes the form of a descending channel, a descending wedge, a pennant maybe of some sort. A pennant would be where the pattern looks more like perhaps that, so that you're forming a typical sort of pennant chart pattern, and you could probably draw it something like this, but we haven't had enough touches of this lower line to know exactly where the best placement of this lower line is. And this is where sort of technical chart analysis, you have to sort of update your analysis the entire time as reality is giving you, or observations are giving you more and more data. We're fairly confident now, or I'm fairly confident now, where this upper line should be placed, because we've had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 touches on this sort of daily chart that we're looking at. So the upper placement is more definite. I've put on an arc just because I like arcs, and it'll be interesting to see if any of this price action does eventually carve out any kind of arc formation, but there's really very little at the moment to suggest that it will. So what I'm looking at primarily is this descending channel of some sort, And the target zone that I've set is around about this 0.382 Fibonacci retracement level, which is 22.80, or alternatively the 50% retracement level, which is around between $20 and $21. So out of those two, which do I think is most likely? Well, a lot of it depends on the fundamentals of what's going on in the big bad world, really. And again, back to politics and what's going on in the US and what's going on in the trading world. So my feeling at this stage is that as we get into late October or early November, we could well see silver price come down towards this 50% retracement level. But I'm certainly not going to guarantee that. And certainly looking at a lot of the miners, they appear to be near the lower boundaries of their supporting, how can I put it, their support lines. So that being the case, there's perhaps increasing amount of evidence coming in that we don't necessarily need to see the silver market correct back much further. The indicators, you might have noticed on the bottom of this chart here, certainly the MACD indicator is showing signs that it might want to begin an uptrend, and also the commodity channel index, which is an index which compares price movements now with price movements, previous price movements over a given time frame. So as that begins to move upwards, what it's telling you is that current price action is sort of positive in comparison to recent price. I'm not explaining this very well, am I? But in a nutshell, when the CCI begins to turn up and cross through these minus 100 and plus 100 levels, then that's where you need to sit up and take notice, because the CCI indicator spends most of its time supposedly between plus 100 and minus 100, and when it drops below or starts to rise above those levels, it's indicative of a trend change. And we've seen, by the looks of it, the lows of the CCI indicator behind us, and if that's the case, then further silver weakness is perhaps going to be limited. So that's the way I'm seeing it at the moment. In a sort of sentence, cautious but cautiously optimistic, and long term very bullish for the price of silver. And when we see a breakout of this upward sort of trend line here, then it's all systems go for silver, rapidly moving towards $30-$35, and then onwards towards $50-$60 ahead of that 8-year cycle correction. So that's it from me. Thanks for taking the time to watch and listen, and more later. Thank you.